Hey, welcome back to our Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And today we are going to look at how the fate of the market is about to be decided. I know this sounds catchy and thumbnail-y crap. YouTube, bear with me. Everyone needs to see this video. We're going to talk about the mother of all levels and how it is about to be decided.
All right. If you guys enjoy this kind of entertaining stock market content with two stupid guys trading stocks and talking all things personal finance, by all means, give us a like and subscribe below. We'd love to have you along this little adventure of ours. With that, we'll get to it.
Two stupid guys trade stocks.
All
I
right.
kept thinking of Trial by Combat from Game of Thrones.
Trial by
Talking
the
about that.
fate of the... Okay, yeah, all right, yeah. Actually, if you've seen that movie lately, it's not that good. It's pretty rough.
right.
All right. I know how this sounds. Everyone's like, oh, little clickbaity thing. We're going to talk about the 200 moving average, looking at the past crashes and how it actually respected or didn't respect certain levels. Okay?
Okay.
Let's get into it. So, this is our stock market right now, all right, from June, about the last year, 14 months. Okay? Now, this gray line, boom, this is your 200 moving average. Okay? Got it?
Yeah, I got it. Yeah.
Super important. This is the most important line. Okay?
Getting pretty close to it.
We're getting pretty close to it. Now, we kind of zoom in here. One thing I want to look at is A, we are approaching the 200 moving average. We're going to go over its significance. And B, oh boy, we passed this level. This was the level that everyone was looking at where they're like, oh man, if we go higher than this, we are breaking out of a trend. Okay? But zoom out a little bit. Okay? We're still getting lower highs, boom, boom, lower lows, boom, boom, boom. Granted, this is a wild recovery. Okay?
Yes.
I hear you. And it's stupid how fast
Yeah,
it's
if you
going.
zoom in, that looks pretty sexy.
Yeah, I agree. Now, I just want to focus on some areas. Boom, 200 moving average, a little bit of hesitation here. Again here. Boom, again. And let's go to the 2008 bear market as to why I'm talking about this. Okay?
Okay.
All right. Now, before this, it was a wild graph, so I don't want to do too much, but it's just above the 200 moving average for a couple years, all right? And then every single time it hits it, it just skyrockets right up, okay?
Okay.
So we have some hits right here where we come down, hit it, bounces up, come down, hit it, bounces up, come down, hit it, bounces up. Oh goodness, I wonder how repetitive this is. And then you can see we have this last hit here and it falls below, okay?
Okay.
This is a significant support and resistance line. We do not reclaim this 200 moving average for the entirety of the bear market.
Really? Wow.
Look at this.
Yeah.
Perfect. All right, let's get a
Strong
closer look.
rejection.
Boom. We do not reclaim this line. It does not happen until we are finally out of the bear market.
Okay.
All right?
Interesting.
Also, this is like a stereotypical perfect spinning top. I don't think that's going to happen. Like this, you couldn't make a textbook like better photo. This seems like it's fake, but it's not. But let's go to the .com crash here. All right?
Okay.
Now this is significantly more messy.
Yeah, I was just thinking that. I was like, man, this is choppy as hell.
This
Comparison to the 2008.
Extremely choppy. Okay? Now I have the highs marked here, 155, lows 124, the first drop. Now let's just look at some things, okay? Once again, before this part of the graph, we are well above the 200 moving average. You can even see there's a hammer right before this where we kind of bounce right up and come down. Now, you'll notice that when you dip below it on heavy volume days, we're never below the 200 moving average in a bull market for more than a couple weeks. Okay? So right here, a couple weeks, go above. Right here, a couple weeks, we shoot right back up. Same thing. We're still hanging above it. We barely dip down. Now, this isn't by no means perfect. As you can see, it's pretty blurry, right?
Yeah.
It was not as well respected as an actual level. It was more a transition zone. So instead of having it to the penny, it was like within $5. All right.
All right.
Same thing. This was much more well respected. And then we have this big hesitation, this big drop off, and then it can't even get above it again. We do not reclaim the 200 moving average until we reverse directions and go back into a bull market.
Wow.
This is that perfect claim here. Boom, 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 down here for a couple of years. I mean, by the way, look at the timeline here. This is, a year and a half, 2 years. We have two hits, another hesitation at the end here. Absolutely ridiculous. Okay? COVID. Now, COVID happened extremely fast.
Yeah, very much so.
Like, it was outrageous how fast it was. Okay? What I want to show you, we're above the 200 moving average yet again, hitting all these areas.
Mm-hmm.
And then even though we are dropping and the whole world is falling apart at this point, right? Look at the respect to the 200 moving average. We gap down, but we still fight back up to hesitate around this level. Every institution, hedge fund, every retail investor that knows technical analysis is watching this level to see what happens. Okay? People are entering short if they see a new low. They see a new low, they enter short, and then they collect their funds. All right? As it comes back up, look, boom, 200 moving average. We shoot up, it comes down for a retest, holds up, come down for another retest, holds up. We never see it again.
Yeah, that was amazing how condensed that was, though.
Isn't that wild?
Yeah. I mean, I think it's hard to infer so much from the COVID crash one as the other two, where you had long, sustained periods where you did not reclaim that 200-day moving average.
Right.
So that is kind of fascinating. So if this were to be truly a bear market and kind of concurrence with the dot-com crash and the 2008 financial crisis, we should be getting a rejection off this level soon. So we're pretty close to it.
Not even soon. This week. This is how intense this is. So this is back to our graph, zoomed out. All right. Now you saw even when we would dip below the 200, when we were in an uptrend, we were bullish. It was never more than a couple weeks. We're on 5 months, right? This is not the same thing as, well, look at the other graphs. We could have been in a bull market this whole time, and this was just a little dip. The longest one, I looked at the math, it was 4 weeks. Okay, so we're 4 to 5 times longer than that. We are coming up to this 200 moving average right now. Now, I don't expect a hard bounce, okay? The 200 moving average is at 431.84. We're at 427. We're 4 points away, all right? Now, I don't expect a hard bounce. However, I do expect maybe we go past it, come down for a retest, and from there, it's going to be decided, is this a fake breakout, and then we have a long fade, or are people actually correct, and this is going to be a bull market? I am shorting the market super hard right now, right?
Interesting. Okay.
So I'm going to watch what happens around this 200 moving average, and if it breaks my thesis, I will cancel my positions, take my losses. I'm not shorting because this is not behaving in the way that I would expect it to behave. All right?
Okay.
Now, if it bounces off this 200 hard, I'm going to add to my short even more.
Okay.
Because with that being said, we should see a lower low below 365, which is the current low.
All right. That's aggressive, but I get what you're saying from a charter standpoint. That I see what you're saying. Definitely interesting. I didn't realize the timeline was like quite so short. Thought this would be playing out over the next month or so. Is kind of like where I thought it would potentially hesitate around this.
It could hesitate for a month, as long as it doesn't. So if you have the level, it could just go back and forth here for a while. But as soon as it takes off either direction, that should tell you where we're going to go.
So with 431 being the current level, so 435 giving it like 5 points or so is probably where you would say would be like the kind of the maximum we reach, even in a choppy phase, before we would really decisively know we've extended beyond it.
During the dot-com bubble, it had almost 10 points above it, and in that time was a little bit higher, but it was only there for a couple days.
Okay.
So
right,
I would expect some hesitation, even if it shoots up and this looks like it's going to be bullish. It should still retest it or come back to it at some point. This is, like I said, this is the mother of all levels. This is the biggest level. It's the one that everyone's looking at, and it's probably going to hit within the next week here. And Vinny's on mute, and he doesn't know.
Well, I'll be fascinated to watch it.
There we go. All right, guys.
All right. Yeah, let us know what you think.
Have a good one.